Hey, good morning, everyone. Slightly later start here. Apologies for that. It is Thursday, March 20th, the day after the Fed. And yesterday, the Fed brought in some upside into the end of the day, but very shocking turn of events. Well, excuse me, maybe not so shocking that we've seen a decent turning point here in these markets on the overnight and quite a significant drop, actually. So, generally, when we have these kind of Fed moves, right? Especially in these current market conditions being that we're in a pretty high risk, decent volatility situation, not only from an inflation standpoint, but we have got tariffs, we got geopolitical stuff going on, and a lot of that was kind of combined into yesterday's Fed breakdown. So some of the highlights from the Fed yesterday, we we saw some, I guess, pre-Fed reports. We had a lot of economists and whatnot talking about Fed puts and whatnot, believing that in order to have a Fed put or a Powell put, we should see an economic problem that would be considered worth their intervention. Currently, they're not even intervening in terms of rate decisions. So the Fed is holding for their gunpowder pretty tight, just in case there could be something more of a cataclysmic event. They see this as a general just market pullback. Realistically, Jerome Powell sees economic growth kind of stagnating in the future, but right now not in need of any real intervention. So some of the highlights: interest rates, they remain the same, right? 4.25 to 4.5%. That was the Fed's funds rate, marking the second consecutive meeting without a rate change. They also looked at economic growth forecasting. The Fed revises 2025 GDP growth projections downward from 2.1% to 1.7%, reflecting concerns over reflecting concerns over potential economic shutdown and stagnation in growth in general. So we could see potential slowdown in earnings projections as well from that matter. We also have inflation expectations for the year were adjusted upward to 2.7% from the previous estimate of 2.5%, indicating rising price levels. We saw that the unemployment rate is anticipated to increase slightly to 4.4% by the end of the year, up from early projections. And we also saw talks of the balance sheet policy starting in April. The Fed will slow the reduction of its balance sheet, allowing only $5 billion of Treasury securities to mature monthly, down from the previous $25 billion cap. And then we also saw the Fed highlighted increased uncertainty in the economic outlook, influenced by factors such as trade tensions, tariffs, deregulations, and restrictive immigration policy. So in terms of Fed cuts, despite holding rates steady, the Fed signaled the possibility of 2 rate cuts later this year, depending on economic developments. And the biggest Fed events this year are going to be mid-year, probably May-June meetings. I think, I'm not sure when. I think there should be a meeting in June. Let me just double check. We go to our handy dandy FedWatch Futures website over here, so we can take a look at what's going on. Morning, Marco, Jack. How you guys doing? So we have a meeting in May and June. So both the May and June meeting are going to be very important, with the expectation of seeing the potential of the first rate cut. I think the June meeting is more so forecasting the first rate cut of this year. So that's going to be a very highlighted meeting. We saw that the Fed dot plot slowly decreased, meaning that the expectation of further rate cuts is expected. And yesterday we saw that the rally in the market overall into the end of the day got pulled back a little, but the big point is that the overnight got dropped very significantly. So we got a massive drop in both the S&P and the NASDAQ peaking out just shy of 20,100, exhibiting a pretty much 300-point drop, while the S&P dropped from that 57.55 after a failure into yesterday's close. And right now, what we're seeing is that continuation for the pullback. So there is a lot of downside pressure right now on the overnight session, and the continuation of risk that is propelling into this market. We have a lot of uncertainty, and it seems like these kind of events, right? The Fed events in December, remember we had a massive drawdown from the Fed event that led into some downside into the end of the year. This time around, we had a decent little pop, but you can see we've already given back all those Fed gains. So it's a matter of, can we actually see any of this upside try desperately to come through as we've tried over the last few days this week without really any kind of give to the upside swing. So things are still looking pretty tight, especially around tech. Tech is still looking pretty crap, and now there is some news out of humanoid AI. AI, one of the big picture and big figures. Can there be progress in AI to really hold up to some of the valuations of some of these large tech names that have been beat down pretty aggressively over the last few weeks? A new iPhone moment, realistically, is being hailed by the robotics industry with a powerful era underway for manufacturing and domestic assistance. When literally humanoid robots are wandering around is not 5 years away. This is a few years away. This is what NVIDIA CEO Jensen Huang said this week in the GTC conference. The company, along with others, already has a lot of skin in the game with its RTX GPUs powering bots, and the firm's coming Isaac Groot N1 serving as a generalist foundation model. So the next generation, as a staple of any sci-fi movie in the past, humanoid robots are now moving closer to reality due to advances in artificial general intelligence. It's a part of what is called embodied AI, which harnesses AI technology inside of hardware, in this case a robot that can carry out real-world functions. Up until recently, most bots relied on code to perform their tasks, which limited their application. The promise of AI will allow them to learn new jobs by reasoning and imitation, or even identifying and solving situations like a human by generalization across common tasks. We know very clearly that the world has served shortages of human laborers, human workers, Huang continued. Humanoid robots never need to take the day off, can work around the clock, and are able to be used in multiple settings. That also includes the workforce, like in factory environments or assembly lines, as well as the home for tasks such as vacuuming, folding laundry, doing dishes, and even companionship. One of the biggest known players is Tesla's Optimus, which Elon Musk called the biggest product in history, with plans to make up to 1 million units by 2027. Maybe this has some reignition to the stock, considering it's down about 50% from its most recent high, or that could be all-time highs. Another US-based player is Brett Addock's Figure AI, which is backed by Microsoft and OpenAI. The company's bots are geared towards manual labor tasks such as logistics and warehousing, and have already been deployed in BMW factories. Others out there include Atlas by Boston Dynamics and Phoenix by Sanctuary AI, as well as Chinese bots like Unitree's G1, Cyber One by Xiaomi, and UBTech's Walker S1. So be on the lookout for more industry partnership and potential innovation. But these are kind of the progression moves that we need to see take hold to reignite this kind of AI storm that's been taking place, because right now everyone's calling it a bubble and it's popping and whatnot, but we've seen that tech does need a boost in this most recent downside, and it seems like the sell side in this market is still very persistent. It's not like the Fed event was super bullish or super dovish. I think there was an air of hawkishness, especially on the downplay of growth and the potential economic growth that's to come. So that had a huge, ignition on the potential downside for this most recent overnight move. So not that I was expecting yesterday's upside to just like flourish and continue, but I was expecting some of this downside to take place during today's RTH session. So the way that I see it right now is that we are pretty bearish currently. The overnight has created something of a double distribution, a B-shaped distribution, where on the S&P, I would say the starting point would be above 5,700 to see any of that bullish momentum continue, but realistically, you see where the volume drops off here on the overnight profile. I would like to see the move above 57.20.25 on the S&P 500 to ignite some of that upside momentum. Right now, the way I see it is still very fragile. I would say that the bear is in control of things as long as we remain under 5700 area and even 57.20.25, where we could try to hit some of those weekly lows currently. So it's a very fragile situation with this larger drop on the overnight and seemingly the continuation of that downside press on every rally. So something to consider today. I'm not extremely bullish on this. It's going to take a lot above 5,700 on the SPOOs, above 57.20.22 on the SPOOs. That's what's going to reignite for me that upside momentum. Until that happens, it's going to be a very tough battle in my opinion. NASDAQ is well below 930, which is going to reignite that upside, so it's something to consider as well. So just reading one of these comments. I appreciate that, Jack. I'm glad that you're enjoying the podcast. More conversations to come. We've got a new episode that's out today, I believe. So go and check that out, where there's going to be more every week. And I hope everyone has a fantastic trading day, taking it slow and easy. After these Fed events, we do technically see some of that downside momentum come after a swing higher. So I have to be very cautious. The current conditions are evolving towards downside pressure, continuous rallies being sold. So it's a point of consideration today that we might just rebid into some of these areas around that 5,700 on the ES before we start smacking things down. So something to take note of. Remember to check out community.tradeproacademy.com for our open Discord, and I'll open up the Zoom in just a bit for our traders, and I'll see you guys later. Live stream tomorrow on YouTube. Maybe, maybe not. We've been holding off on the live streams, just focusing on the internal streams here at TradePro. But if you want to join our streams, just check out community.tradeproacademy.com, and I'll see you guys later.